do now with trade not being as big of a concern? Bob, over to you.
And see, but the question is, do corporations have any more visibility on 2020 than they had a couple of weeks ago? I think you can marginally argue they do indeed. Look, the Fed is neutral now. They've made that clear. U.S. economy, chances of a recession pretty low. Brexit, big defeat for labor. That's a positive for stocks. Trade deal, you could say, well, it's not really a deal. We're on hiatus. It's some kind of truce, at least for the moment. Global growth, we're still trying to figure out the bottom, but it does look like there's signs of a bottom out there. And if that doesn't convince you, the global markets seem to believe there's a little bit better visibility recently. Look, we're hitting historic highs in the U.S., 52-week highs in Europe, 52-week highs in Japan, 8-month highs in emerging markets with a weak dollar. That's certainly a sign. That not impress you? How about the VIX? 11? When's the last time you saw the VIX at 11? That's near the lowest it's been in a long, long time. That's a sign the markets aren't too worried right now. Still not impressed? How about something else? Take a look at high yield. High yield's a proxy for risk. This is a play on credit, not a play on interest rates. We're at 52-week highs. This is the largest ETF for high yield out there. If that doesn't impress you, how about bank stocks? We've seen yields moving up. We've seen the yield curves strengthen. We're at breakouts on new highs on all of the major banks. There's your major ETF, the KBE, at a 52-week high. I think you can make an argument, Tyler, somewhat better visibility than we had 2 weeks ago. That's certainly what the markets are saying. Tyler?
All right, Bob, thank you very much. So with stocks at record highs, is there more room to run into 2020, or will this ongoing trade war put a ceiling on the market? Brent Schutte is Chief Investment Strategist at Northwestern Mutual Wealth Management, and Michael Aroney is the Chief Investment Strategist at State Street Global Advisors. Gentlemen, I note that both of you are basically sanguine about the pace of stocks, but you diverge a little bit. On the one hand, Brent, you say small caps, value stocks, and international as losers or laggards move to winners. And Michael, you on the other hand say you like U.S. stocks compared with international, you like big stocks relative to small caps, and you like some of the growthier areas as opposed to the value areas. Brent, you make your case first, and then we'll get the rejoinder from Michael.
Sure. I think if you look in the U.S., you want to become more cyclical because LEIs will be moving higher. So small caps in general last year have underperformed dramatically. If you think back a year ago, small caps were expensive because the narrative originally was that they were insulated from the trade war, which was completely wrong. You had leading indicators in PMIs peaking, and you had the Fed moving real rates positive. Those are negative for small caps. Fast forward to today, they're cheap because they've underperformed. Leading indicators in PMIs are bottoming and will push higher next year, and the Fed isn't tightening anything. They will be out of the question, out of the picture for 2020. Negative real rates are here on the inflationary front, and that is a basis for a small cap rally.
All right, so Michael, rejoinder, please.
So I think with greater clarity on trade globally, not only the U.S.-China, but also the potential for the USMCA, you could see a reacceleration in global growth. One of the headwinds to multinational companies in particular has been the strong dollar. So now with the growing budget and trade deficit, the Fed who's already cut rates, and an improvement in trade, I expect better earnings from multinational companies that should flatter those earnings. And they also benefit to a greater degree by the lower tax rates, much more than small caps from that standpoint. I think the other interesting thing here is that earnings per share growth rates for small cap are significant for next year, and my guess is they're likely to come in a little bit disappointing relative to the significant expectations that analysts currently have on the small cap stocks.
Brent, do you think the market's reaction to the Phase 1 deal is justified? Because this deal does leave out some major issues like Huawei, cyber theft. It also keeps the 25% tariff on $250 billion of Chinese goods in place, which the Trump administration says will be used as leverage in the Phase 2 discussions. But in general, what are your thoughts about the market's reaction to this trade deal?
Yeah, I do think it has been rewarded, and it's been right, because actually, if you look at it, essentially we've had a normal economic business cycle ticking underneath the surface, but that has been probably quieted by the political noise that's been rising. If that political noise tamps down, which we think it will, we don't think there's an escalation in 2020 because the president doesn't want to have that happen in election year. We do think it leads to better growth and it leads to better market outcomes in the future, and that's the most important point.
One of the possible winners, Michael, technology, chip makers, Apple as well. But this is a sector that is now trading at its highest level in 15 years. I mean, is there room left to run in this sector?
I think there is, and particularly given the fact that rates remain so low. So given the fact that the cost of capital is near zero, companies that can generate a tremendous amount in terms of return on invested capital when their capital costs are so low, in terms of very high growth rates, and an economy that's still likely only to grow in the U.S. around 2% and globally a little more than 3%. High rates of growth continue to be attractive, and those valuations, although they're higher on a relative basis to where they've been in a while, they're nowhere near the nosebleed levels we saw at the start of this century at the technology, media, telecom bubble.
All right, gentlemen, thank you very much. Michael Aroney, we appreciate your time. Brent Schutte, you as well. Thanks, guys. Well, the nation's home builders are feeling pretty confident about their businesses, according to a report out this morning. And Diana Olick is here to explain. Hi, Di.
Hi, Ty. Homebuilder sentiment in December jumped to the highest level in 20 years on the National Association of Home Builders Index. Not only is it well in positive territory, but it's up dramatically just from last year. Why? Well, the builders point squarely to the severe housing shortage on the existing home side, as well as to high housing demand and an improving economy. But NAHB's chief economist Rob Dietz noted builders are still underbuilding due to a lack of labor and land and increased costs. Now, you can see that when you compare sentiment with actual housing starts. Sentiment's way up, starts not as much, despite the fact that builders are seeing much higher sales conditions and buyer traffic. And stocks of the big names like Lennar, D.R. Horton, and Pulte, well, they're up a bit, but they were a little lower this morning because interest rates are moving higher today. It appears that no matter how great the builders feel, mortgage rates will always have the last laugh. Back to you guys.
That's a good point, Diana. Thank you. And coming up on Power Lunch, a changing of guard at NBC Universal, our parent company. We'll look at the legacy of Steve Burke and the challenges ahead for his successor. And shares of Amarin falling today after soaring Friday on positive news for a key drug. We'll talk to the CEO about the potential for the drug and what the market might be missing. That's coming up on Power Lunch.
This CNBC program is sponsored by
Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho. Who's made a list this year?
I want a new phone. One with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Be honest. How much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18 plus. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Changing of the guard at our parent company, NBC Universal. Julia Borsten live in Los Angeles with more on retiring CEO Steve Burke's legacy and the challenges his successor will face. Jeff Shell. Julia, over to you.
Well, Seema, when Jeff Shell becomes CEO of NBC Universal, CNBC's parent company, on January 1st, he'll be focused on continuing the strong financial performance under the leadership of Steve Burke, while also navigating the digital disruption of the film and TV industries. Shell's top priorities include the launch of ad-supported Peacock, that's the streaming service launching in April, followed by the Tokyo Olympics this summer. At the studio, he'll look to maintain the growth of its franchises, while the theme park division works to open new resorts in Beijing and Orlando. Shell, a 15-year veteran of Comcast, most recently chairman of Universal Filmed Entertainment, takes the reins from Burke, who's been CEO since 2011, when Comcast's acquisition of a majority stake of NBC Universal closed. Now, this has been a tenure of dramatic growth for Burke. Between 2011 and last year, NBC Universal nearly doubled its earnings, the fastest growth rate of any major media company. Burke's achievements include securing the broadcast rights to the Olympics through 2032. With the Rio Olympics the most widely seen event ever, he engineered the acquisition of DreamWorks Animation. He led the expansion of the theme parks, including buying out private equity partners in the Orlando parks. He invested in Telemundo, which under his leadership eclipsed longtime leader Univision in primetime. And as the executive vice president of Comcast as well, he was a key architect of the Sky acquisition. Now Burke will assist in the transition as chairman through mid-August. After his retirement, he will continue to serve on the boards of JP Morgan and Berkshire Hathaway, and he'll be spending more time at his place in Montana. Guys, back over to you.
Sounds like a nice future for him. Julia, stick around for more on this leadership change at NBC Universal and the challenges ahead for incoming CEO Jeff Shell. Let's bring in our friend Andrew Ross Sorkin. Andrew, welcome. Facetiously, I would say that the legacy of Mr. Burke is that no longer do we have to have GE appliances in the break rooms. That's the main thing that I see here. But I would say if I had to pick, and Julia did a marvelous job summarizing all of the things that Mr. Burke has done, one of them that stands out to me is the vitality of the theme parks that he has brought, and he has made them a real serious rival.
But I want to put one other on the list that's not on the list, and he doesn't get enough credit for buying NBC in the first place.
True.
So if you really understand the confidence that Brian Roberts had in making this what was a momentous decision then, because you have to remember where NBC Universal sat within General Electric.
Fourth in the network race at that time, and a rounding error to GE.
I would argue that Steve Burke gave Brian confidence and courage to make the deal at all. After that, 100%, the theme parks have outperformed anything, wildly outperformed anything anybody thought was even possible. But I do think that Comcast as a company would be a different company without NBC Universal, and would be a different company had Steve Burke not been there to make that happen in the first place.
What do we know about? Oh, go ahead, Julia.
Oh, I think a key thing is not only did he give Brian Roberts confidence to make this major acquisition, but also what he did with the acquisition once they had a hold of it. I mean, the assets at NBC Universal, one might argue, have been really transformed. And one thing he did was this idea of, he created this cross-company collaboration system called Symphony. The idea is that these different divisions should not be operating totally separately. They should be collaborating. They should be figuring out ways. The TV division, the channels, the movie studio, the theme parks can all work together and really maximize all of those different brands and assets across platforms. And I would say that NBC Universal really did not have anything close to that approach until he came in and created that idea.
And he was as an operator as much as he was a deal maker. You know, Julia mentioned the Olympics. That was done almost in the cover of night, surprised everybody, and really pushed out and created a consistent system and theme for these networks, as we said, through 2032. I remember when I woke up that morning and thought, wow, they've got it for that long?
I had forgotten that it goes out to 2032. Yes. I mean, that's really amazing.
And then again, I think in terms of the behind-the-scenes role that he played in the Sky acquisition, I mean, I think that the imprint that you will see of Steve Burke is here and will be here long after he hangs out in Montana.
Yeah, he certainly led the company through a number of transformative moments and events. what do we need to know about Jeff Shell, his management style, and some of the challenges he may inherit?
Everybody keeps saying challenges, challenges. Yes, there are a lot of challenges, and Julie can speak to this probably more than anybody else. The big challenge is streaming and what streaming means, and getting Peacock off the ground and what that's going to look like, what that does at the same time, by the way, that talk about challenges, the linear TV business by default will be challenged, and what does that look like? Having said that, and Julia again can speak to this better because she's out in Hollywood, when Jeff Shell first got out to Hollywood, I remember reading these stories, and I know Jeff is a friend, but when he first got there, everybody was writing him off. He actually got into that chair and made it work, and made it work better than anybody anticipated. You look at the franchises and the franchise films that, by the way, didn't exist before he was there, many of which are now going to be ongoing franchises, and by the way, you'll start to see in the theme parks.
As rides and attractions.
Exactly.
So, Julia, I'll have you sum it up here. And Andrew pointed out that really the challenge is streaming. And it's not just streaming as a rival to what you can get on television, the broadcast networks or the cable networks like CNBC, but it is streaming as a rival to filmed entertainment and the in-theater experience.
Yes, I mean, I think, it's worth noting with Jeff Shell's appointment that this is an executive who has touched nearly every single part of the company. He has international experience. He also was appointed to run the studio with no movie experience. And as Andrew mentioned, was written off, and then he went on to have the most profitable years ever. So he's between the international and the domestic experience here in Hollywood. His office is just about a block away from where I'm standing right now on the studio lot. This is someone who is seen as having all the experience necessary to take the reins and really to add a fresh perspective as they navigate these digital challenges. And I think when you talk about the streaming challenge, it's not going to just be about what content is on Peacock. It's about how Peacock is managed in conjunction with the cable companies, and they've talked a lot about wanting to make sure Peacock is bundled with cable and sort of trying to figure out how to reach those cord cutters or reach cord nevers. And then there's also the question of what happens with the movie business. Universal has been speculated to be one of the studios that would like to shorten the window between theatrical and home entertainment release. Peacock could be a piece of that. So I think there are going to be a lot of pieces in play in terms of trying to figure out how to make sure that the content assets that are created here on the Universal Studio lot where I am now are best exploited either with the ad-supported Peacock or with trying to get movies to people's homes faster.
Julia, Andrew, thank you very much.
Thank you.
We wish both of those gentlemen the very best for our own sakes as well. Thanks, guys.
Thanks.
Shares of Micron Technology and Western Digital boosting the entire chip sector today after a big upgrade. Is now the time to buy chips. Plus, the Boeing 737 MAX saga taking a new turn, and the stock preventing the Dow from heading even higher. Will the grounding of those planes continue to drag on? Power Lunch, we'll be right back.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
So it's already December 16th. Well, at Boots, this Christmas, there's better than half price on selected gifts. Save money on gifts like Emporio Armani Diamonds He, 75ml, was £63, now only £29.99, and other selected products. Get on it today at the What to Buy Your Nearest without it being the dearest boutique. At your nearest Boots in London White City Shopping Centre. So gift like you get them before it ends 24th of December at selected stores and boots.com.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Tonight, TuneIn has your Monday night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith at the touch. Smith double tackle into the end zone. Traquan Smith.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to Power Lunch. Micron leading the semis to record highs today after Susquehanna upgraded the stock to positive on future earnings growth. But after chipmakers surged in the past week, could their hot rally cool down? Let's bring in your Trading Nation team, Ari Wald of Oppenheimer and Nancy Tengler of Laffer Tengler Investments. Ari, what are the charts showing you?
They are signaling to stick with semis. This is one of our favorite market areas. Not only does it rank high in our momentum work, really broad-based across the board. That's what we're looking for. It's the whole group working. One name we like here, Microchip Technology, MCHP. Not as extended as some of its peers, just starting to break out. The levels to watch, 108. That was the stock's peak from 2018. So just breaking through 2-year resistance. On that breakout, we see upside to $130 with some trading support here at 97. Here's a fresh breakout just getting going by Microchip.
Nancy, the trade story has certainly helped this sector outperform in 2019, but what do the fundamentals tell you?
Yeah, it's been really interesting. We went over the weight the group last December, and in March I thought maybe I had made a big mistake, but they've really been one of the top performing groups this year. We've expressed our commitment to the industry by the sector, actually, by adding in overweighting Broadcom and Texas Instruments. Micron looks really interesting here, despite the big run-up recently. It's underperformed for the last 5 years, the information technology sector index. I like it. I think we're going to take a look at it. We've missed it so far, enjoyed our other holdings, but I think the company is well-positioned as we move forward.
Micron and Microchip, Ari and Nancy, thank you for joining us on Trading Nation. Head to our website or follow us on Twitter at Trading Nation.
And ahead on Power Lunch, Boeing grounded. The company considering now halting 737 MAX production as its grounding of that aircraft wears on. What does this all mean for Boeing? Well, today, a downward moving stock. Plus, a booming biotech, Amarin, receives FDA green light for one of its heart drugs. Shares are soaring this year, and the CEO will join us next. Plus, a decade of dominance is on its way out. But before starting out a new decade, we will tell you which stocks are buying opportunities for the next 10 years. All this when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Many traders like to watch technical patterns, and one of the most popular ones is called the Golden Cross. The Golden Cross is where the 50-day moving average moves up through the 200-day moving average. And while this pattern is not intended to get you in at the very bottom, it can often be an effective entry point for a stock or ETF that's in an uptrend. I'm Randy Frederick, and Schwab is the better place for traders.
You know it's out there somewhere, but you just keep missing out. I'm talking about your dream job. Now it's easier to find and land your next role with the LinkedIn app. Build connections, keep in touch, and be the first to hear about new jobs. LinkedIn has more openings than applicants. And sometimes all it takes is one LinkedIn connection to land the job that's right for you. Don't miss out. Get your next big break and find the job meant for you. Download the free LinkedIn app today.
Floor 32. Last one.
Computers sleep peacefully, bins full of the day, vacuum follows faithfully. A forgotten desk lamp, switch it off, let it rest. Outside, black softens to deep blue, hinting at the day to come. Time to pack up, to disappear once more. Sausage and egg McMuffin awaits.
Over 700 McDonald's open 24 hours. We are awake.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. British Prime Minister Boris Johnson and President Trump say they look forward to the negotiation of an ambitious free trade agreement. This during a phone call this morning, according to 10 Downing Street. Trump congratulated Johnson on his winning Britain's general election. China's foreign ministry is criticizing the U.S. for expelling Chinese diplomats who drove into a sensitive U.S. military installation, asking Washington to reverse its decision. The New York Times reports that the U.S. secretly expelled 2 Chinese embassy officials this fall, but neither country made the September episode public. Here at home, freshman New Jersey Congressman Jeff Van Drew is expected to leave the Democratic Party to become a Republican. He reportedly discussed switching parties in a meeting with President Trump at the White House on Friday. In response, 6 members of his staff resigned. And completing a 25-year journey, Mariah Carey's 1994 carol, All I Want for Christmas Is You, has hit #1 on the Billboard Hot 100 chart for the very first time. It's the first holiday song to hit that mark since the Chipmunk song. You remember that, back in 1958 to 1959. That's the news update this hour. Seema, I'll send it back to you.
Sue, thank you. And it's actually my favorite movie, Love Actually, because of that song.
There you go.
Thanks, Sue. And at this hour, let's take a look at the markets. The Dow's still up triple digits, but off the highs of the day, led by technology. The S&P and NASDAQ also higher. All 3 major indices notching fresh records on that phase 1 deal. And check out some of the stocks hitting record highs today. Nike, Apple, Target, and JP Morgan all trading at their best levels ever.
All right, time now for today's Power Movers. Shares of Axum Therapeutics soaring today after announcing its new experimental depression drug passed a key hurdle in its phase 3 trial. Next, PG&E sliding today. California Governor Gavin Newsom rejected the embattled utilities bankruptcy plan. The rejection complicates PG&E's push to exit bankruptcy and pay out billions to wildfire victims. And finally, take a look at shares of Tesla. They are revving up today. I don't think Tesla really revs after Credit Suisse's bearish analyst admitted that Tesla's focused on electric vehicle batteries is a key advantage for Elon Musk's car company. Meantime, shares of Boeing falling 3% today as that company reportedly considers cutting or suspending production of the 737 MAX as the timeline for the plane's return to service slips deeper into 2020. Back in April, President Trump said the company should rebrand the MAX given the bad press, and it's only gotten more bad press since then. So does the company need to try something radical to fix public trust in the plane? With us now is John Ostrower. He's editor-in-chief of The Air Current, and he is a Boeing expert. He is in Seattle, I take it, because the Space Needle is behind you. John, good to see you, sir.
Thanks for having me.
Let's get to the question of whether the 737 MAX and its branding needs to be totally overthrown. Is the only way that this plane or a cousin to it comes back and succeeds is if they don't call it that anymore? Or will the public buy that?
Well, in aviation, actions matter, and history matters, and what on forward matters. And changing the name of this airplane isn't going to fundamentally change that. What really matters is Boeing getting this airplane recertified by the FAA, recertified by global regulators, and back in service safely. That's the only thing that will fundamentally rebuild the trust in Boeing and its product.
So let's go back and look at history of the DC-10, which famously, there was a terrible air disaster near Chicago involving a DC-10. I don't remember the history of whether they tried to rename and rebrand that plane, but I do remember the history, and that was that plane went out of manufacture within a couple of years of those disasters.
Yeah, so there was a really horrific air crash near Chicago in May of 1979. And the airplane, the DC-10 from McDonnell Douglas, was actually grounded for 37 days after that crash. And the airplane came back in the summer of 79. And all the summer plane tickets had been booked, so the plane actually flew full for the most part when it came back. It was about a year later that McDonnell Douglas actually found that public trust in the airplane was really, really shaken. About 5% of people said they would never touch the airplane, and 10% said that they had really grave concerns in the airplane safety. So McDonnell Douglas tried a pretty extensive campaign in 1980 to make this airplane bring it back to life commercially and rebuild the trust in the public, in the eyes of the public. What happened was it actually backfired badly, because what ended up happening was it just reminded people about what had happened to the airplane the summer before. And about a year or two later, McDonnell Douglas actually tried to rebrand the airplane, calling it the MD-100 with some updates. And they didn't sell any. And by 83, 84, the airplane was pretty much limping along in production as a freighter carrying no passengers at all, and as an air tanker for the U.S. Air Force.
It's already, John, cut production by a fifth back in April, right? From 52 to 42. Would you be surprised if we don't see these planes back in the air by, let's say, summer of next year?
Well, right now, the reporting from the Air Current points to no earlier than mid to late February. There are a bunch of outstanding items with the FAA that need to be addressed before this airplane is recertified. So, really, we're looking like, at least late first quarter at this point. We had American Airlines last week push back their schedule again. Probably going to see the U.S. carriers, Southwest and United, do the same. As this drags on, certainly this has an effect on the airplanes that have been continued to be produced. 42 airplanes a month on a manufacturing calendar is still 2 every single day. And there are hundreds of these airplanes piling up around Boeing's factories in the United States.
Yeah, it seems to be in the eye of the storm right now. What about the wider fallout on its suppliers, like GE, which makes the engine?
Well, look, I think if Boeing does further pull back production of the 737 MAX or halt it altogether, what we're going to see really firsthand is how interconnected this global supply chain in aerospace really is. This is not just a Seattle story. This is engines that are made in Cincinnati, in France, and fuselages that are made in Wichita, and seats that are made all over the world, and everything from electronics and hydraulic tubes and everything from nose to tail, including major parts made in China. This is going to be, you're going to really see a major economic hit here, but certainly the main priority is getting the airplane back and back safely. So that, to some extent, that's going to take a backseat to getting this airplane really where it needs to be.
So as an observer and a reporter in this area for a long time, John, what would you recommend Boeing do in terms of public relations when this aircraft is recertified. Would you suggest that they stay sort of below the radar, to use a horrible cliche in this context, but or should they go out and mount a campaign to try and rebuild confidence in the brand, or just kind of let it come back in stealthily, quietly, and make little of it?
Well, history tells us that the hardest thing to do is doing nothing. And actually, that might be the right thing in this case, because you just have to let the airplane speak for itself and fly safely every day with the airlines that purchased it. The problem is, in looking at the history again with what happened with McDonnell Douglas, is that there were actually 2 more crashes of DC-10s that were totally unrelated to the grounding later in '79. And that's one of the big risks that ends up, may happen here, that something totally unrelated may happen to the airplane that has nothing to do with what has caused the grounding. So again, going forward, we're just going to have to see the airplane fly and fly safely. And that's ultimately going to be what revalidates it in the eyes of the public. No PR campaign will be able to do that on its own.
John, thank you very much for your time and insight today. We appreciate it. John Ostrower.
Thanks.
To the bond market we go. Rick Santelli standing by, tracking the action at the CME. Rick.
Hi, Seema. You know, if you look up at the board and you look at what's going on with stocks, they've been pretty buoyant. They really have had some nice comebacks, been hugging the highs. Look at it 1 week, the S&P 500 overlaid with 10-year note yields. You could really see that it certainly has this magnetic feeling pushing rates up, pulling them up. Look at a 2-day of 10s. We are on the high yields of the day, but you can see the right side is flattened out a little bit as we approach 190. Boons and gilts on intraday charts both responded to the upside around the same times as they closed, as the Treasury complex, which was buoyed not only by equities here, but global equities in Europe, particularly in the UK. Better data, especially in China. And I saved the best for last. I normally don't bring up the National Association of Home Builders Optimism Index, but when it's at a 20-year high, another reason to give stocks and thus rates a little buoyancy today. Seema, back to you.
You are certainly right. A report that we are watching very closely. Rick, thank you. Turning our attention to biotech, shares of Amarin soaring more than 40% in just the past 2 months. Now it's got a key drug that's been approved for new use. Coming up, the company's CEO joins us in studio. Power Lunch. We'll be right back.
The Bond Report.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
In Washington, D.C., there's only one word in everybody's mouth: impeachment. As the impeachment process moves on to the next stage, don't miss history unfolding on TuneIn. Wherever you are when the latest witness takes the stand, you can listen to every hearing live as it's happening on Capitol Hill. And between hearings, turn to stations like CNN, MSNBC, and Fox News Talk for bombshells, breaking headlines, and bold analysis every step of the way. Search Impeachment News on TuneIn to hear the latest.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 podcasts, season 6. Listen in favorite 30 for 30 podcasts on TuneIn.
Along the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Move, and a shot,
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Welcome back, everybody. Shares of the biopharmaceutical company Amarin were soaring Friday after the FDA approved its key heart drug Vascepa. And even with the stock pulling back a little bit today, it is still up 70% this year. We're about to be joined by the company's CEO, but first, let's get a little more on this story from Meg Terrell. Hi, Meg.
Hey, Tyler. Well, Amarin got approval for its heart drug Vascepa for a much broader group of patients after the drug was shown to reduce the risk of cardiovascular events like heart attack and stroke. The drug, which is derived from fish oil, has been on the market in the U.S. since 2013, but the decision Friday means it could be prescribed to millions more people to lower their heart risk. The stock jumped in the after hours Friday, but it's down slightly this afternoon, I'm told, because of some profit taking and some uncertainty leading into a patent case just a few weeks away. And here with us now for a Power Lunch exclusive is John Thero, President and CEO of Amarin. John, thanks for being here.
Very happy to be here. Thanks. No, you're right. This is a big, important approval for Amarin. Also a big, important approval really for society. Some docs have phrased this to be the most important advance in preventative cardiovascular care in the last 30 years.
Tell us how many more patients you can now target with this drug than you were able to before the approval.
So previously we had a niche indication, an important niche indication, but it was for lowering triglycerides. Triglycerides are fats in your blood. Now we're looking at lowering cardiovascular risk. So if you think about statin therapy, and statins are important, they lower cardiovascular risk. So Lipitor, the most important, the largest used statin, lowers cardiovascular risk by about 25%. We lower cardiovascular risk by about 25% on top of their 25%. So this is millions of people.
Tell us about the market for this drug. You're charging a few $1,000s on a list price per year per patient, is that right? And the idea that you'll get reimbursement for that. What is the coverage like with the insurers? And how do you look at situations like we just saw with Sanofi saying it's getting out of cardiovascular disease because the market's not good?
So Amarin has done things that are a bit different. We are a science-driven company out to try to help patients. You're right, Big Pharma has generally backed away from taking on addressing chronic ailments. They're really difficult to overcome, and the development of Vascepa has taken over a decade. Once we've gotten here, often for the breakthrough technology, someone will charge a very high price. We've taken the approach of charging a price that's a fraction of what other new drugs have been introduced at over the past decade. Very proud that in both October and November, two separate groups came out with cost analysis showing that Vascepa is not only cost effective, but will save society money by lowering and preventing cost of heart attacks and strokes, for example.
How high do your triglycerides need to be to make you a good candidate for this drug? And do you have to not respond to changes in diet to get it down earlier? I ask out of personal interest.
Not asking for a friend.
Yeah. So medical treatment would always encourage that folks focus on diet and exercise first. And also we're looking at patients here who have already tried statin therapy. But if you're on statin therapy or you don't respond well or are intolerant to statin therapy and have triglyceride levels at 150 mg per deciliter, which is on the borderline of normal and high, Vascepa becomes something that might be considered. Now, the patients who are generally going to be looked at are patients with established disease. They might have had a cardiovascular event previously. They might have peripheral artery disease, coronary artery disease, problems with the carotid artery, or they might be diabetic and have other risk factors as well. So we're not trying to treat healthy patients, but we're trying to treat patients who are at risk. And in the study of our drug, we found out that over a 5-year period, on average, one fewer major cardiovascular event was seen for every 6 patients treated. So that's a pretty significant reduction in cardiovascular events.
John, there are a lot of people out there who take fish oil to prevent heart disease. What's the difference between your drug and the fish oil you can buy at the store?
It works.
Is it higher potency? I imagine it's much stronger.
There's a lot of science, and if somebody is healthy and they're looking for supplements, there are a lot of supplements out there that might be worthwhile. But if you are sick and you're at risk for a cardiovascular event, really a proven therapy makes sense. There's been multiple studies done of dietary supplements and omega-3 mixtures, and they just haven't worked. There's a tremendous amount of science here. If you were to take a classroom of students and go in and say, solve a problem, you might find one that can solve that problem. We've gone into fish oil, which is dozens of different ingredients, found the right ingredient. It's a fragile ingredient. We've extracted it without damaging it, and then found a way to keep it stable, and we've gotten that to the right spot in the body. And by doing that, it performs very differently than your normal fish oil.
Before we let you go, we have to just quickly ask you about the next catalyst that investors are already looking at, which are the patent challenges to the drug. Can you tell us about, are you looking at a settlement? Are we going to trial early January?
So I think there are a lot of catalysts. We're looking for approval for this drug in Canada. We just filed in Europe. We're looking for completion of a clinical trial in China as well. This is a major drug. Anytime you have a major drug, you always have patent challenges. We're confident in our patents, and we're intending to defend those vigorously.
All right, John, thank you so much for joining us.
Thank you.
Thank you, John. Appreciate it. And thank you, Meg.
Thank you.
We've got a news alert on Amazon and FedEx. Let's go to Eric Chemi now for the details. Hi, Eric.
Hey, that's right, Tyler. So check out FedEx stock. It's dropping a little bit. That's according to a Dow Jones report that Amazon is blocking its third-party sellers from using FedEx's ground delivery network for prime shipments, citing a decline in performance heading into this final stretch of the holiday shopping season. The ban on using FedEx's ground and home services starts this week and will last, quote, until the delivery performance of these shipping methods improves. That's according to an email Amazon sent Sunday to merchants that was reviewed by the Wall Street Journal. Remember, Amazon stopped using FedEx for its own deliveries in the United States, but third-party merchants had still been able to use FedEx until now. CNBC reached out to both companies. We'll let you know if we hear more. So that's why the stock with that quick dip here in the last few seconds. Back to you.
Yeah, session lows now. Eric, thank you. It's been a decade of domination for Netflix. The stock up 37% in the 2010s. Is this a stock you can buy and hold? Up 3,723%. More on that stock, whether you should buy it or hold it or sell it. That's next on Power Lunch.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Spend Christmas Day listening to the NBA on TuneIn Premium.
Featuring 5 big matchups on the holiday schedule, unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8, and a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Welcome back to Power Lunch. There are just 10 trading days left in the entire decade, and the S&P 500 is sitting right near record highs. Take a look at some of the top S&P 500 performers over the past 10 years, all up more than 1,000%. Netflix is the king of the decade, up more than 3,000%. So should you keep buying these names for the next decade? CNBC Fast Money trader Steve Grasso here to tell us the names that will boom and which names he thinks will bust. Steve, good to see you. So let's start with the names that you think have gone too far too fast.
Netflix is the one that stands out to me. Can you imagine any better environment going forward as Netflix had when they started off? China is not going to be an area of growth. U.S. not going to be an area of growth. India, there's too much competition. I think you got to sell Netflix. It's had an unbelievable run, but the competition for the first time is insurmountable for them.
Yeah, it's a good point. Which ones do you still like?
So if you go through these, URI, basically you're going to have booms and busts in the economy. I think you have to buy this one because when you really stagger yourself, the economy, if it's a bust, you're going to want to rent the equipment. If it's a boom, you're going to want to buy the equipment. Either way, they're going to flourish in this. It gives the operational guys room and flexibility to survive. This has been a Starwood. This is, if you look back at growth, 20% in 18, 20% in 17 before that. Projected growth of between 15 and 20% overall when they count all the chips up for 19. I think this is one that has 13% market share in North America. It's been a performer, as you just said.
Yeah.
I think you got to stick with this one.
Big name in the industrials. What about biotech?
So biotech, Albiomed, ABMD is a device company. It's in the cardiac space. So this one's been under pressure as of late, but that's to be expected with any device company or anything in the medical field. This is one that with aging baby boomers, anything cardiac centric is going to be a boom going forward. The biggest thing for me in this one is they have zero debt and they have tons of cash on hand to counteract any type of headwind that you would see. I think long term, this is a name that should be bought.
Yeah, aging demographics, something we're seeing not just here, but in Japan and China. Steve, I want to draw your attention to this graphic. Take a look at some of the biggest losers of the decade. We're looking at GE, Tapestry, Devon Energy, all of the S&P laggards there, falling double digits since New Year's Eve 2009. Which one of these names is the diamond in the rough?
Well, GE, and I've been long GE around these levels, and I have a slogan, GE, $20 in 2020, and I do expect that to happen. You're starting to see a lot of price targets raises. You're starting to see them try to get ahead of their liabilities, unfunded liabilities. So you see the power group has been a definite headwind for them. The losses in that group have been subsiding, and then you see aviation and health. They have been coming on, whether it's incremental or not, the momentum has changed. I would say that it's all about free cash flow. And once that starts to increase, as it has been, you're going to start to see this thing take off. And that's why I'm there. And that's why I think it's going to be a huge stock in 2020.
Stock trading at 11 and change. It's actually up 53% this year, although well off the highs that it traded at back in the 2000s.
It got hit, Seema, off of the Boeing headline, the negative headline today.
Right.
But I would just shrug that one off and look for fast gains here forward, and especially in 2020. I think you're safe to be long that name. I'm staying along it.
Got it. Steve, thanks for joining us. Steve Grasso.
Thank you.
And when we return, we will deliver the check to the table.
Each day. My name's Ian, and I run the Christmas Centres for Crisis. Many people in Britain are homeless, stuck in hostels, sleeping on floors, even on the street. You can change this. Our Christmas centres provide people with food, safety and support, and show them how Crisis can help them find a home and a job in the year ahead. You can reserve a place at Crisis this Christmas for just £28.87. Search Support Crisis Reserve
and help someone take their first step out of homelessness this Christmas. Thank you.
Tonight, TuneIn has your Monday Night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith into touch. Smith over tackle. Into the end zone. Traquan Smith.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Check, please. The market is on pace, Seema, for its fourth green day in a row. No reference to the band Green Day, though I do like Green Day. When September Comes, a very nice song.
Great song.
One of the things we were talking about on Friday that was very interesting to me on the day of the trade deal announced with China and various other economic things, the one thing that was not mentioned that day and has not been mentioned until now is impeachment. It is amazing to me how the market has absolutely discounted what it thinks is going to happen and play out, and I think lots of people would agree with the market's assessment of it. But it has been fundamentally a non-factor, either economically, it would seem, and certainly not in stock prices.
Let's see if that changes. That vote coming up on Wednesday. So,
Yeah.
Tyler, we'll see if it becomes a bigger part of the market conversation. But to your point, trade really dominating the headlines.
All righty.
That does it for us on Power Lunch.
And Closing Bell starts right now.
Seema, Tyler, thank you. Welcome to Closing Bell. I'm Contessa Brewer in for Sarah Eisen today, and we are at the Boeing Post. That stock off 3.5%, moderating the gains on the Dow. The component under pressure. We have details on why coming up as we count down to potential record closes on the Dow, the S&P, and the NASDAQ. Will.
Contessa, thank you. I'm Wilfred Frost. Good afternoon. Let's have a look at what's driving the action. Optimism over the Phase 1 trade deal with China sending all three major averages to new highs, as Contessa just mentioned, with the NASDAQ leading the pack today. Boeing sitting out the rally and dragging on the Dow on new concerns over production of the 737 MAX jet and positive news on the housing front as homebuilder confidence jumps to its highest level in 2 decades. Coming up next hour, former Treasury Secretary Jack Lew will join us to discuss trade and the economy. You do not want to miss that. And with us for the whole first hour of the show, Dan Nathan from Risk Reversal Advisors. Dan, good afternoon. Thanks for joining us.
Great to be here, Will.
So, more optimism again on trade or whatever you want to put it down to. Is a lot of this news not already out there? Are you surprised to see ongoing rallies to new highs yet again?
But listen, at the end of the day, you like to see follow through. So Friday, we had kind of a muted reaction. I think a lot of investors expected some sort of surge, maybe similar to what we had in the end of 2017 after the big tax cut. A lot of this was priced in. I think the continuation of last week's rally into this week is obviously pretty bullish. Also fairly seasonal as we are looking down the barrel of what was just about a week and a half left of the market in 2019, a year that the S&P 500 is up 27.5%. So it's hard to find reasons to sell the market right now between now and December 31st.
Let's drill down on all of the big stories that we're focusing in on today. Bob Pisani's covering the names driving the market to new highs. Phil LeBeau has details on new concerns about the 737 MAX, and analyst Mike Boyd will join us to break down where Boeing goes from here. Kayla Tausche is in Washington with the latest on trade, but let's kick things off with Bob on the floor of the exchange. Bob.
Breakouts very strong right at the open, 5-1, advancing the declining stocks. Over 200 new stocks hitting highs at the New York Stock Exchange. Very powerful rally we've got. It's led by the banks. Remember, higher yields and a steeper yield curve. This has been going on for the last couple of weeks. New highs almost every day in the big banks, the Goldman Sachs, the money center banks as well as the super regionals like U.S. Bank Corp and Regions Financial. Technology, Apple consistently on the top, but so are a small group of semiconductor stocks like Micron. They got an upgrade today over at Susquehanna, Qorvo, Skyworks, and others, all 52-week highs. Do we have more visibility in 2020? The markets seem to be saying that it does. VIX very rarely at 11. Not many times this year does it hit that low. It's there again today. Finally, just high yield stocks, bottom line, new high there as well. Guys, back to you.
All right, thanks for that, Bob. Meantime, Boeing is sitting out today's rally amid new concerns about the 737 MAX. Phil LeBeau has those details for us from Chicago. Hi, Phil.
Hi, Contessa. The Boeing Board of Directors wrapping up a second day of a two-day meeting, a scheduled meeting here in Chicago, discussing the 737 MAX production. What they're looking at is whether or not to slow down or to halt production of the 737 MAX. I'm told by sources familiar with the discussions that they're more likely to halt than to slow down if they change the production at all. Just a reminder, they are building 42 737 MAXes per month. That is a production rate that we last saw back in 2016. As you take a look at shares of Boeing, remember, this is also the time after meetings like this where they announce what the quarterly dividend is. They have not cut their dividend. It's always either been sustained or increased, going all the way back to 1937. Let's see if there's any change in that dividend if we get an announcement either today or tomorrow morning. Guys, back to you.
Okay, I know you're monitoring that closely. Thanks for that, Phil. Joining us now from Denver, Mike Boyd, chairman of Boyd Group International, which is an aviation forecasting and consulting firm. It's nice to see you today. Give me a sense of how you're looking at the challenges that Boeing is still facing, Mike.
Well, the point is, when you have an airline like Southwest, it desperately needs these airplanes. Putting it off until the first quarter, that means they see something that's going to delay these airplanes. So Boeing has to do something in the meantime. They're running out of places to park airplanes, and they have to have suppliers screaming at them. Remember, the day they announce this airplane can go back into the sky, we probably have 6 to 8 months of digesting what already has been produced.
So if you're sitting there with 400 new MAX units since March, do you think that a cut in production is absolutely essential?
At some point, they're going to run out of places to park them, and at some place, they're going to have to figure out how they're going to handle their cash flow. So I think it really is. But once this deal is done, again, you can't dump 40 airplanes on American Airlines. That's going to be over a couple of months. So I think they may want to cut back on the number of airplanes that are sitting out there and reconsider.
Mike, does Dennis Muhlenberg still have credibility in investors' eyes?
Well, he must, because he's still there and he has credibility with the Boeing Board of Directors. The question is, does the MAX have credibility? And to be very honest, it's almost become a joke now, the word MAX. Again, what they need to do is sort of repackage that airplane, and they're not moving in that direction.
Hey, Mike, does it trouble you a little bit, though, that the company was moving at a much quicker pace to get that airplane recertified and get those production levels going? And it really took the FAA to slow things down finally. Going back to the question about Muhlenberg's credibility, it seems like they really wanted to get this thing going faster than the FAA wanted to.
I think they did, but I think that they, again, it's not just the FAA, it's CAAC in China, it's the EU. All these people now have their hands in this little pie, and they want to make sure that it's right for them as well. So for Boeing, it's out of their control right now.
Dan, what do you think about the stock here?
Well, I think Mike mentioned cash flow, and here's the problem. They had $26 in cash flow per share last year before a lot of these incidences were going on, and now they're expected to be flat from 26 to 0, and that's the story. So if they halt and then they have this drain on cash flow, they have these fixed costs to make all these planes. They have a backlog of 4,500 planes. So to me, I think, unfortunately, if you do get a halt, I think the CEO is going to be on short time, and then 2020 is kind of lost, in my opinion, for the stock.
Mike, one more thing here. What about the suppliers?
Excuse me?
The suppliers?
Oh, the suppliers, it must be huge, because it's not just all, the Goodriches of the world and Collinses of the world. There are a lot of smaller suppliers there, and at some point they're going to say around the world, it's not worth pouring money into this unless you can give me some money. And Boeing, they're not getting any money for these 400 airplanes that are sitting around. At some point, the suppliers might pull the plug, and we don't know that some may have already done so.
All right.
Mike, one final thought, Mike. I mean, how damaged is the brand of the MAX? The president tweeted about that today, suggesting they might need to rebrand the plane. Even under that rebranding, potentially, are customers ever going to want to get on this plane again?
Well, yeah, they should. I think, remember, the consumer has a pretty short memory, but let's be real blunt here. I mean, the brand is damaged. So you need to come out with, my opinion, and I'm not a Madison Avenue guy, but they need to come out with something called the Ultra or something else so people think it is not exactly the same airplane, and indeed it won't be.
Mike Boyd, thank you so much for joining us today. Appreciate that. We have some news now on FedEx and Amazon. Eric Chimmy has that story. Hi, Eric.
Hey, that's right, Contessa. FedEx stopped dropping after Amazon said it's blocking its third-party sellers from using FedEx's ground delivery network for Prime shipments, citing a decline in performance heading into the final stretch of the holiday shopping season. The ban on using FedEx starts this week and will last until the delivery performance of these ship methods improves. That's according to an email Amazon sent Sunday to merchants. Note that Amazon had already stopped using FedEx for its own deliveries in the United States, but third-party merchants had still been able to use FedEx. CNBC's reached out to both companies for comment, but you can see the stock there dropping 1.5% after being positive earlier today. Back to you.
Eric, thanks so much for that. Dan, any thoughts on FedEx stock at this level?
Interesting timing. We know this is like a pretty crucial week. We know that UPS and FedEx over the last few years have had some problems kind of delivering up to Amazon specifications, 2-day free shipping, all that sort of stuff. So, at the end of the day, FedEx is going to report tomorrow. They're going to report earnings tomorrow after the close. That'll be pretty interesting. Obviously, the stock has been kind of battered over the last couple of years, really underperformed UPS here. We know that Amazon has set their sights on logistics. They want to put FedEx and UPS out of business or make them a second or third source. So to me, I think that this is kind of an Amazon flex right here. The timing's not great for FedEx, though.
They're flexing with FedEx, but they're not flexing with the United States Postal Service. I mean, you want to talk about performance issues. I just, as a customer, I'm saying.
FedEx stock, by the way, moving over 2% on that news. It had been in the green, partly because of trade optimism, perhaps, but now very much in the red, down 1.7% today. Turning now to trade, as the US and China agree a phase one deal. Potential problems, though, arising on the new NAFTA or USMCA. Kayla Tashi has more in Washington. Kayla.
Well, Mexico is outraged that the U.S. version of the new NAFTA allowed for 5 inspectors to regulate its labor reforms on the ground. So Mexico's chief negotiator returned to Washington to make sure that provision wasn't as heavy-handed as it sounded.
These personnel will not be labor inspectors, and it's not the kind of inspector that had been discussed for the whole year.
The air appears to have been cleared. A statement from the U.S. trade representative said they're no different than existing inspectors that the U.S. government has in Mexico. The USMCA still teed up for a House vote on Thursday. Guys?
Kayla, thank you for that. It's funny because USMCA has somewhat been overshadowed by the importance of the U.S.-China deal, but this is a deal that really matters to a lot of businesses' bottom lines.
Yeah, I mean, China is less of a trading partner than Mexico and Canada combined. We know that this deal was agreed upon months and months ago. Obviously, the ratification was just kind of foregone conclusion. Listen, it is important, but I think it's important to also remember this is a rolling trade war. It really started with some threats about auto tariffs in Europe, and then with the metal, aluminum, and steel, and now we're in South America. So it looks to me that we're going to have some trade stress in the global economy for some time to come, because even with this phase one deal with China, we don't have a huge rollback of tariffs as it is. So I think the trade situation globally is going to be really tense for at least until after the election.
But if USMCA passes and gets ratified, one can see the president getting behind that, and for those trade partners at least, not starting another rolling trade war. He has form, whether it's Korea or Japan, on backing down once there's been an agreement he can put his name to. Not least going into an election year, he'll want to pin success onto this.
I think there's one thing that's very clear about this president, that he has weaponized tariffs. What did he do with Mexico when he didn't like what was going on with immigration? He threatened tariffs. That's not something you would generally do for a political issue. You wouldn't bring in trade sort of thing. So I wouldn't put anything off the table. And I'll tell you, whatever we just rolled back with China, if he doesn't like what's going on over the next couple months or as we work towards a phase two, there will be more tariffs pair of threats. So to me, I think the phase one is kind of toothless at the end of the day. It's not much of a win, in my opinion.
Markets nicely higher today, set for 3 record all-time closing highs for the major averages. The S&P up 0.8%. 48 minutes left of the session. Still ahead, former Treasury Secretary Jack Lew will join us live here at Post 9 to discuss the state of the economy, the 2020 election, and much more.
Up next, the fintech fight. We'll bring you details on a brewing battle between Venmo and one major brick-and-mortar bank. And as we head to break, here's a check on our data tracker. The Empire State Manufacturing Index beating estimates in December with a reading of 3.5. And home builder sentiment hitting a 20-year high in December, topping estimates with a reading of 76. Closing bell. We'll be right back.
This CNBC program is...
You know it's out there somewhere, but you just keep missing out. I'm talking about your dream job. Now it's easier to find and land your next role with the LinkedIn app. Build connections, keep in touch, and be the first to hear about new jobs. LinkedIn has more openings than applicants. And sometimes all it takes is one LinkedIn connection to land the job that's right for you. Don't miss out. Get your next big break and find the job meant for you. Download the free LinkedIn app today.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Next time on the New Yorker Radio Hour, Greta Gerwig on bringing Louisa May Alcott's novel Little Women to the big screen.
Women have all kinds of practice imagining themselves as men, and men have very little practice imagining themselves as women.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Cutting for the net. Scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
45 minutes left to go of the trading day. We're on record close watch for the Dow, for the S&P, or for the NASDAQ, all sitting comfortably over the levels to beat. Let's check in on an individual market mover now. Shares of WW are moving today on news. Oprah Winfrey is extending her partnership with the wellness company into 2025. Winfrey has been a board member, strategic partner, advisor, and shareholder of WW. This is the company formerly known as Weight Watchers. She's been there since 2015, and as you can see, that stock is up 3.5% on the day.
The power that she brings.
Yes.
Fantastic.
Oprah touch.
It's been a banner year for investments in fintech companies, but an influx of cash hasn't led to many buyouts for certain IPOs. Kate Rooney is in San Francisco with that story for us. Hey, Kate.
Hey, Will. Good to see you. So finance startups are attracting billions from private capital. Despite that, we're seeing very few liquidity events this year. Take a look at the most valuable names. Stripe is by far the biggest. There are now more than 58 so-called fintech unicorns out there. We saw Bill.com last week, but otherwise not a lot of mega deals. Investors worry about sticker shock, among other things. These private price tags have not made banks big buyers here. The most likely path is an IPO, according to investors. But when these finance startups do end up tapping public markets, investors may not see them as a tech company. The most obvious comparison is a bank, which don't trade at nearly the same multiples. Wilf?
Hey, Kate, I love all of these stories, and Chime we discussed at length recently. Hugh Sun had some data on that. It was on a sort of 20 times multiple, 20 times sales multiple. I guess the difference being is that created a huge amount of value, these startups, but I'm not sure they've taken that much revenue from the big banks, which is slightly different from, say, an Uber threatening taxis or an Amazon threatening retailers.
Right. When you look at the actual user numbers, they're tiny compared to JP Morgan, for example. But the public comparison of when these companies actually go to IPO, investors have said they're not a tech company. You know, they do the same things as a bank. In many ways, they're not a bank. They partner with the U.S. Bank or some of these chartered banks in Utah. So I think public market investors will really want to see the value there. We saw it with WeWork. They saw it, they valued it as a real estate company versus a tech company. So it works in private markets. Investors are wondering if that can carry over to an IPO, which we haven't seen a lot of. So it's sort of uncharted territory.
So Kate, stay with us. We want to get your take on this story as well. The Wall Street Journal this weekend highlighting tensions between fintech and big banks after some PNC clients experienced trouble connecting their bank accounts to Venmo, or they had been connected and then suddenly they weren't connected anymore. Both companies gave customers different instructions about how to solve the problem. Venmo tells users to tweet their concerns to PNC. PNC told customers to switch to Zelle instead. Zelle is a Venmo competitor that PNC and other big banks operate jointly. At issue here are these wider concerns among the big banks, reportedly saying, look, we have security concerns that limit access to customer information on fintech platforms. But Kate, the other part of this story is that they have a really proprietary view of their customers' information that belongs to the big banks' platforms.
I think the huge takeaway here is who owns the consumer's bank data. It should be the consumer, and that's what the banks would say, but is it really your data if you can't export it easily or move it to a consumer app like Venmo? You have these sort of third parties like Plaid, which has become a middleman in this instance. But I spoke to a few experts and lawmakers who basically said this open banking issue is a real problem, and something like this with PNC arguing with Venmo over, what is best for the customer really underlines that open banking issue, which, Wilf, we've seen in the UK with some legislation there. So we'll see what happens in the US, but I think that's sort of the big takeaway is who owns that consumer data?
That's a big question. All right, Kate, thank you for that. Coming up, one Wall Street firm just put out a naughty or nice list for stocks 9 days ahead of Christmas. We'll reveal the naughtiest name on Wall Street.
That's Goldman Sachs CEO David Solomon penning an op-ed in the Financial Times focused on two massive challenges facing the economy. We'll tell you what they are and how he plans to address them.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
On the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Tonight, TuneIn has your Monday night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith into touch. Smith double tackle into the end zone. Traquan Smith.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Welcome back to Closing Bell. Time now to get to the word on the street. RBC Capital Markets out with its 2019 Naughty or Nice list. General Electric tops the nice list due to demonstrated traction in its turnaround plan throughout the year, the first year for CEO Larry Culp. GE is up more than 50% in 2019. 3M tops the naughty list, with RBC saying 5 guidance cuts in the past 7 quarters have tarnished some of its reputation as a defensive, high-quality safe haven. That stock down about 11% this year. And next up, Imperial Capital lowers its 2020 estimates for MSG Networks. The firm says it faces near-term risks as it negotiates 2 different affiliate deals, and that a shaky performance by the New York Knicks could make it harder for the company to reach a deal with distributors.
And Citi upgrading Goldman Sachs to buy from neutral, saying a lack of interest rates and credit risk gives the stock a favorable risk reward. Citi also raising its price target on Goldman by $35 to $255 per share, implying about 13% upside. I mean, the interesting thing for me on this, Dan, if you look at Morgan Stanley's price to book and Goldman Sachs's price to book, there's a 12% gap in the 2 multiples at the moment. 2 big questions for Goldman come early in Q1. One is 1MDB, the other is the January strategy update. I think if both go well, that gap closes, is worth 12% or so upside. The question is, which of those 2 factors weighs on the share price more at the moment? It's hard to know, but if both go well, I think it could be looking 12% higher pretty quickly.
Listen, this is a stock that about 13 months ago was trading right where it was right now, and we know what happened to it. It cratered in Q4 2018. Now it's all the way back here, but I think it's really important to remember the 5-year and the post-crisis high is about $280. So you get that thing back above book value, you're going to have a stock moving back towards those 2017 or 2018 highs pretty quickly. And I think when you make a comparison of some of these investment banks, you have to think about who is the purest play investment bank, and it's these guys. You get 1MDB behind you and some of these other issues about what Solomon's strategies are, and I think this stock kind of re-rates.
I think from all the conversations I've had with various sources, I do get the feeling that 1MDB resolution is getting much closer. Separately, on the January strategy update, I refer people back to John Waldron's comments to me last week. He was very, very clear on the strategy update. They're well prepared. He was confident about it. Some other reports have suggested they were going to kind of lowball it or not give estimates. He didn't say that. So possible that both could be successful in Q1. We'll have to see. Sticking with Goldman Sachs, CEO David Solomon out with a new op-ed in the Financial Times on social and environmental impact investing. The CEO calling attention to what he says are 2 defining challenges facing the economy: climate change and economic inequality. Solomon saying there's not only a powerful business incentive, but also an investing case to act on those issues, writing that Goldman Sachs plans to target $750 billion of financing and investing over the next 10 years in areas focused on climate transition and inclusive growth. Solomon also suggesting the best way to fight climate change is to have governments put a price on carbon through a carbon tax or other means. I mean, it's a very good read, and I think most importantly, that general theme about making this something that capitalism has to support rather than it always just being a charitable cause is the only way to really solve the crisis long term. What I would say, though, whenever you see banks criticized by environmentalists for having advised an energy firm or lent to an energy firm, it's always a bit of a rich criticism, though if you go out and put yourself out here with this type of op-ed, you're kind of inviting that criticism next time that the cycle comes around. So we'll see how it plays out, but it's definitely worth a read, this op-ed.
I think it's interesting that he's throwing a gauntlet down, and probably not just for the goodwill that it earns him among people who care about the environment and climate change, but also because if you could get governments to act in concert, then it levels the playing field for those who are willing to do the right thing for the environment and to preserve climate change and not see it move any further if you see everybody playing by the same rules.
Well, he joins good company, right? So it's Tim Cook at Apple, it's Jamie Dimon at JP Morgan, it's Mark Benioff at Salesforce.com. I think this is a good group to be in. They're going to lead. Thought leadership is important from some of these, massive billionaires in the world. And so, I think you're right, though. When you lay down the gauntlet and you're a bank and you touch a lot of different businesses in a lot of different ways than maybe a software company or an iPhone company does, you're going to have to actually walk the walk that you just talked.
Absolutely. Either way, trading higher today. We'll have more on ESG investing later in the show when we speak with one of the Wall Street Journal reporters out with a new story on ESG funds that have drawn scrutiny from the SEC. Lots more still to come here on Closing Bell. Don't go anywhere. We'll have former Treasury Secretary Jack Lew here at Post 9 live. We're back in a couple of minutes.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera, now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile, every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status, terms apply. See tescomobile.com/terms.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
Next time on the New Yorker Radio Hour, Greta Gerwig on bringing Louisa May Alcott's novel Little Women to the big screen.
Women have all kinds of practice imagining themselves as men, and men have very little practice imagining themselves as women.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
29 minutes left to go in the trading day. Here are the three things driving the action. The major averages hitting record highs on optimism over that phase one trade deal with China. Boeing sits out the rally today on new concerns over the production of the 737 MAX, and home builder confidence jumping to its highest level in 2 decades. Let's get a CNBC News update now with Sue Herrera. Hi, Sue.
Hello, Contessa. Hello, everyone. Here's what's happening at this hour. A federal judge has set a sentencing date of January 28th for retired Lieutenant General Michael Flynn following his guilty plea of lying to the FBI. In a separate 99-page order, the judge rejected arguments by Flynn's attorney alleging misconduct by the FBI. At a town hall meeting, Michigan Congresswoman Alyssa Slotkin getting a strong reaction about her op-ed explaining why she's voting for impeachment. She spoke to a large crowd in a Detroit suburb about her opinion piece in the Detroit Free Press.
I hope that even if people don't agree with my decision, they see that I based my decision on my personal integrity. And that is the most that I can do to show people that I hear them, even if we don't agree.
Reebok is introducing an eco-friendly running shoe that's plant-based. It boasts its Forever Float Ride Grow shoe, rivals the best performance running shoes on the market. It will launch in the fall of 2020. Everything is plant-based these days. That is the news update. You're up to date. Back to you guys, Wilf.
A response somewhat to all birds, I feel like.
I think
but
absolutely.
Sue, thank you. Lovely to see you as always. We'll see you again next hour. Now, as this decade comes to an end, Bespoke Investment Group is looking at how the last 10 years compare to previous decades. Paul Hickey, co-founder of Bespoke, joins us now. He's at the Telestrator. And Paul, you've got a couple of charts to talk us through on this topic.
Yeah, I do. So, we have 2 weeks left in the year and the decade. So we just want to see how things stack up this decade compared to prior decades. Now, it seems when you talk to investors, everybody just thinks the market's done nothing but go up in the last decade, which it has been a very strong decade. So we're up about 185% in the S&P 500 so far in the 2010s. The 1990s, though, we were up 315%. 1980s, 227%. And the 1950s, 257%. So it ranks as the 4th best decade for U.S. equities in the last 110 years. But we always hear references to the 90s. In the 90s, we were up 315% after a decade where we were up 227%. So this is nothing compared to this, I think. So I think in that respect, it has been a very strong decade for stocks, but nothing uncharted or off the beaten path. What makes this decade unique, though, if we move along to the next slide, is if we look at the standard deviation of returns, just how much the returns have differed year to year. This decade has been the calmest equity market we've ever seen in U.S. history. So for all the talk about how, headline to the next, how things have been so over the top and so extreme, the weakest year this decade was a 6% decline, which was last year, which there's only been 2 other decades where we saw even a less than 10% decline in any year. So this is the mildest, weakest year. And the strongest year was 26%, and that is the 4th weakest of the best years for any decade. So it just goes to show that things are very calm in the last 10 years, despite what most people would have you believe.
If we went back to the first chart whilst we discussed, Paul, I wonder whether if you focus in on that 80s, 90s return, given that, of course, we're now questioning whether the next decade can be as strong again like the 80s following the 90s showed, stripping out all other factors, was economic growth through both those decades strong enough to support that? I.e., if we're going to see a repeat of what we've seen in the last decade, next decade, do we need to see very strong growth throughout that period?
Well, so for starters, I think to expect a decade like this past decade again, I think is a little bit, too much cake, so to speak. But I think we can definitely have a positive decade here. As long as the key is the 80s and 90s were periods of tranquil economies, steady growth. This is the only decade we've seen in U.S. history, again, that we didn't see a recession. So I think as long as you get economic growth and steady, it doesn't have to be gangbusters, but if you have steady growth as well as a Fed that's at the market's back, which I don't think anyone would argue otherwise right now, you can have decent returns moving forward.
The other point as well, Dan, I'd bring up on this is for the past decade we've seen, looking at S&P 500 returns as we are, the biggest single structural factor has been the growth in these tech stocks, which now make up most of the index and most of the gains. again, looking to the next decade, you need to see something large and structural as opposed to just 2% cyclical growth every year to justify the levels of returns we've seen in the past decade.
Yeah, so the most important thing of the last decade was the fact that interest rates were at zero, and that interest rates around the globe were at zero. The fact that the U.S. Fed expanded their balance sheet by $6 trillion, and that doesn't even include what else was going on all around the world. And if 2018 Q4 taught you anything about trying to normalize interest rates, what happened to the S&P 500? It dropped 20% in 2.5 months. So if you want to talk about a tranquil decade for stocks, you also have to barbell it and discuss the unprecedented easy monetary policy of the Fed. That's the only way to have this discussion, because all that other data from prior to 2009 doesn't really matter, because interest rates were basically at zero for the last 10 years.
Paul's going to be joining us again a little bit later in the show, but Paul, for now, thanks very much. We'll see you in the market zone.
We have some breaking news now on Live Nation. Let's get to Julia Borston with those details. Julia?
Contessa, the Department of Justice could take action against Live Nation as soon as tomorrow. That's according to a source close to the situation who tells me that the concert and ticketing company has until the end of the day today to respond to the Department of Justice's proposed remedies to violations of its 2010 commitment to not force concert venues to work with Ticketmaster. Within the next few days, the DOJ could either file a motion that it has come to an agreement with Live Nation on the changes the DOJ seeks, or if talks break down, the DOJ could start the process of taking Live Nation to court. We've reached out to Live Nation and the DOJ. No comment back yet. Guys, back over to you.
Okay, Julia, thanks so much for that. Julia Borston. We've got just 22 minutes left of the session. We are on record close watch at the moment. We're set for 3 record closes for the major indices. The Nasdaq's up a 4%.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Next time on the New Yorker Radio Hour, Greta Gerwig on bringing Louisa May Alcott's novel Little Women to the big screen.
Women have all kinds of practice imagining themselves as men, and men have very little practice imagining themselves as women.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Welcome back to the Closing Bell. 19 minutes left in the session. Here's a check-in on the Closing Bell Big Board. All the major averages hitting record intraday highs and on pace for their 4th straight day of gains. Below, we've got today's biggest outgainers: United Health, Pfizer and Apple, and Mosaic Company, Under Armour, and Cabot Oil, all the biggest gainers on the S&P 500. Green across the screen.
19 minutes left to go now. And Dan, talk to us about your last chance trade.
So this time of year, you start thinking about how to position the portfolio into 2020, into the new year. Spotify is a name that's really interesting. It's on most of your smartphones, right? This is a company that has been up 25% in the last month and a half or so. They reported an unexpected profit in the last quarter. If they do that again when they report in February with 250 million or so monthly active users and 113 million paid subscribers, this stock's going higher. There's the chart. It gets above that 52-week high of 160, and they beat again in February. This thing is off to the races, maybe back to the prior all-time high near 200. And I also think this is a really interesting name. Netflix has underperformed massively this year. We know why. Content is going away from them. I think that they will ultimately have to horizontally expand their content offering. Could you think of a better one than streaming music and podcasts, which is what Spotify's been a huge... Yes, I think that they should be buying...
Netflix should buy Spotify.
Yes, they should.
And realistically, you think that might happen?
It's a $30 billion market cap right now, and Netflix has been withering over this past year from its highs. And to me, I think that, Reed Hastings is a genius. He kind of figured out how to kill Blockbuster. Then he figured out how to do a lot of other things against the big boys. I think he's going to figure out how to horizontally kind of broaden out his offering.
It would also be quite a sort of challenge to Apple, though, to enter into that space as well.
No doubt about it. I could think of Google. I could think of Amazon. I can think of 5 people who should come in and buy this asset right now.
Yep. Spotify is Dan's last chance trade. We're now going to take the final commercial break before we head into the close. We'll come back and take you through the day's biggest movers in the market zone. That's coming up next. And later, our exclusive interview with the former Treasury Secretary, Jack Lew. You don't want to miss that.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Far wing elevates, triple bucket. The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA Today to start listening.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen now to 30 for 30 Podcasts on TuneIn.
14 minutes left in the trading day, and we're now in the closing bell market zone. Commercial-free coverage of all the action going on into the close.
Today we are joined by Dan Nathan from Risk Reversal Advisors and Paul Hickey from Bespoke.
Let's kick things off with Boeing. That stock sits out today's big rally. Bob Pisani at the Boeing Post now. Bob?
In the Dow, big outlier. Look at this, down 13 points. That's 4%. That's 90 points in the Dow, and that's the main reason the Dow is dramatically underperforming the S&P 500. Remember, Boeing has, of course, suppliers all over the world to them, so there's a lot of companies that are being affected, including another Dow component, General Electric. What's the connection? Well, General Electric has a joint venture to supply engines for the MAX. They have that joint venture with another company that trades over in Europe. That's Safran, symbol is SAF. That trades over in Europe. Both of these, of course, are down on the day. There's other companies out there being affected, particularly some European companies. Spirit Aerosystems. Spirit is Boeing's biggest supplier overall. They make the MAX fuselage, so that stock is also trading to the downside. Guys, back to you.
Bob, thanks so much for that. Dan, we discussed this a little bit earlier, but it has been lower than this so far in 2019. Does that give you some sense that it's going to bounce again? It's not as bad a piece of news as we've had earlier in the year?
Listen, I'm shocked that the stock is basically flat on the year. I'm shocked that it's still up. 346 people died in the last year and a half on 2 flights, that this company is clearly, I think, it's going to come out pretty negligent in why those planes came down. And, again, in that last segment when we were talking to Mike Boyd, the fact that the company was rushing to get this plane recertified so quickly, I just don't really get it here. So to me, I think this stock has some support near term at 320. Then you see the 2018 low in December down at $300. But after that, look at a 5-year chart. It looks like Amazon.com of the last 5 years or so. There's a lot of air below. And I think when you think about this cash flow going to zero in 2019, and what does a halt look like for this plane that was just going to be so much of their, their manufacturing, 4,500 backlog for the MAX. So to me, I just don't think you step in here and buy this thing right here.
Boeing very much weighing on the Dow today, that the Dow is still set for a record all-time close alongside both the S&P and the NASDAQ. Also, now FedEx shares under pressure because of a fight with Amazon. Eric Chemmy's got the story for us. Hi, Eric.
Hey, Wilf, that's right. FedEx stock dropping after Amazon began blocking third-party sellers from using FedEx's ground delivery network for Prime shipments, citing a decline in performance heading into the final stretch of the holiday shopping season. The ban on using FedEx starts this week and will last, quote, until the delivery performance of these shipping methods improves. That's according to an email Amazon sent Sunday to merchants. FedEx also confirming the news to CNBC a few minutes ago. Note that Amazon had already stopped using FedEx for its own deliveries in the U.S., but third-party merchants had still been able to use FedEx. Now, for now, back to you.
All right, thank you for that, Eric. Paul, what do you think about this? Is this a real shot across the bow for FedEx, or?
I don't know how they can resume once the performance starts to improve if they're banning them all. But it's just a matter of, I think FedEx has an issue. The TNT acquisition didn't go through well for the company, and then you get. They said when they lost Amazon as their deliverer, that contract, they said that wouldn't have a material impact, but I think it is, and more you're seeing, especially in the suburbs, the trucks all over are Amazon Prime trucks, and that's eating into FedEx's territory, and I think it's another headwind for the stock, more competition in the space.
Paul, I wanted to ask about Amazon as well, given that we had that analysis earlier of comparisons of the decades. Is next decade a decade where Amazon's going to have to grow into a reasonable PE, and how quickly does that day dawn?
Yeah, we saw that same issue in late the 90s. Those stocks became incredibly overvalued, and it took them a while to get back into their valuations. I don't think Amazon is nearly a similar argument as that, but at some point you have to, the growth slows, and you have to start growing into that multiple, and it can be a gradual process. But to see a repeat of Amazon's performance over the next few years, like the past few years, I think is just ludicrous to expect that.
Semis hitting record highs today, and Josh Lipton has more on what analysts are saying about that. Josh.
So Contessa, Micron is now a buy. That's according to the team at Susquehanna. The analyst boosting his price target as well to $85, saying he's looking for improving fundamentals here with tightness and shortages for the company's memory chips by mid-2020. He is also now bulled up on Western Digital, lifting his rating and price target there to $90, saying that next year 5G phone sales and new game consoles should help lead the way to tight supply demand. Taking a step back, chip investors have been well rewarded in 2019. The SMH, the ETF that tracks the chips, hit a new high today, surging about 60% this year. Guys, back to you.
Josh,
Thanks, Josh. Dan, what do you think? Is there more room to run here for the semis?
Here's the thing. We just talked about FedEx, and there was a piece of news about this, and we said, listen, you're going to get their earnings and their company's commentary tomorrow after close when they report. Micron reports on December 18th. So we're going to get a really good sense of just how tight that supply is and what does listen, this is a sector, and Josh said the SMH, the ETF that tracks the semis, is making new all-time highs, massively doubling the performance over this year of the NASDAQ almost. And a lot of it might have to do with trade. There might have been some double ordering for a lot of these tight supplied sort of chips. So to me, I think you want to be careful as you head into this thing just went parabolic from 45 to 55 micron, and it's kind of losing some steam in today's session.
SMH there year to date up 62% or whatever it is. Paul, are they not already priced in all the best news?
Well, semis are incredibly volatile. They were down a lot in 2018, so they're going to outperform. They outperform on the way up, underperform on the way down. That's just the way they are. What was really notable the last downturn in the semis is that the trough was a lot milder than any other prior trough in the semis. And to what Dan was saying, when you're looking at, we're talking about FedEx and Micron, FedEx is transports. That's the old guard. Semis are the most important indicator and group for this market in our view. And as long as they continue to hit new highs as they're doing, I think it bodes well for the broader market. So December 18th, Micron earnings, that'll be an important gauge to watch. But the semis, as long as they continue to outperform, I think it's hard to get negative on the market.
Just under 7 minutes left to go in the session. Let's get to Meg Terrell for a look at some of biotech's biggest movers. Meg.
Hey, well, two pieces of news out of the FDA and a positive clinical trial have biotech stocks on the move today. Let's start with Horizon Therapeutics. That company getting a positive vote Friday afternoon from a panel of outside advisors to the FDA for its drug for a rare eye disease. An approval decision from the regulator is expected by March. Meanwhile, Amarin getting approval from the FDA for its heart drug Vascepa for millions more patients at risk of heart attack and stroke. The stock rose Friday, but it has been down today as investors already are gearing up for the company's patent battle over the drug. A trial is scheduled to start in January. And finally, BioMarin getting some positive clinical trial news on its experimental medicine for achondroplasia, the most common cause of dwarfism. It plans to file for FDA approval, guys, next year.
Well, Meg, how's that being received among people in the little people community?
It's a really important question, Contessa. It's a bit of a controversial drug. Some folks in the community don't believe that a drug that right now has proven just to increase height is something that the community needs, or that achondroplasia is something that needs to be treated in that way. So it's going to be very interesting to see the response from the community next year as this drug potentially moves through the FDA.
All right, Meg Terrell, thank you for that. Pair of headlines sending Tesla stock soaring today on pace for its highest close since September of 2017. Mercedes-Benz announced it will push back the release of its first mass-market electric vehicle to 2021. And the Credit Suisse analyst, a longtime Tesla bear, out with a new report giving Tesla, quote, credit where credit is due. The firm concedes Tesla is leading in areas that will define the future of car making, like software and electrification. Dan, on Tesla, it seems like right now it owns the market.
Owns the market? I mean, well, which market? The stock market? Or, I mean, the stock's up 14%. I just love it that all these Tesla bulls are taking these victory laps. The S&P 500 is up 27%. This stock obviously has come a long way over the last 6 months because they didn't just wasn't just a disaster this summer when people were pricing it in for that. So stock's up 14%. Owning the market, fine. They have this gigafactory. They're doing great on batteries. Mercedes pushing out a higher end vehicle that is going to be actually going against their Model S. To me, the whole story about Tesla is their ability to do this kind of low end Model 3. And that is not where I don't think Mercedes is going to be competing with them. So this is just a short squeeze into year end. I'll just remind you guys that 380 on the upside is a level where this stock in each of the last 3 years has failed. So I'm not sure I'm buying a breakout here on that piece of news.
I think the commentary on Tesla from that analyst talking about, for years, all we knock up against Tesla is once these other players get in, it's going to be game over for Tesla. We keep hearing about it, but it never comes. It's like free beer tomorrow. We keep waiting for it, but that doesn't happen. And the thing about Tesla, I think their growth is going great. The one area to watch is the customer service, because as they've been selling more models, the customers are having more and more complaints about getting good service. So that's going to be, I think that's the key issue to watch, is customer satisfaction as the new models come out.
Especially if you're an early adopter, if you're one of the people who put your name on a list to register for the Cybertruck, you want to know that the customer support is there for it too.
Right, there's going to be a lot of issues when the first iterations.
Just over 3 minutes after the session, record closes expected for all three of the major averages. Let's check in on Uber, rallying on news it could sell its Uber Eats business in India. Let's get to Deirdre Bosa.
Hey, well, CEO Dara Khosrowshahi has said that Eats needs to be the number one or the number two player where they operate, or they'd get out. In India, Uber is reportedly close to doing just that, selling its service to local rival Zomato. Now, different reports have put the price tag at between $400 and $500 million. But guys, here in the U.S., Uber is third in terms of market cap to DoorDash and Grubhub. If it can close that gap, Khosrowshahi has suggested it may be worth waiting out. Question is, of course, will investors get impatient? Despite today's pop on that news, shares are still about 30% below its IPO price. Back to you.
Dee, thanks so much for that. Dan, I guess the market would love if it could be in a position where it was always the lead and it didn't have price competition. It's just a long, old journey for Uber to do that in all of its business lines.
Listen, I think that's great discipline. I think that the difference between the Lyft story and the Uber story is that Lyft is a pure play on rideshare in North America, where Uber is doing all things to everybody all over the globe. So I think investors will continue to cheer Dara being sober about opportunities in emerging markets where they're not a one or two player.
2 minutes left to go. Let's get it over to Rick Santelli for a check on bonds. Rick?
Yes, thank you. 1 week of twos, pretty sideways action, well-worn shoe range there, but it's still up 3 basis points nonetheless. Double that 3 and you're up 6 on the 10-year note. You see a September chart there. We always seem to run out of gas a little bit when we get that 190. Today's high 189. And if you zoom the chart year to date, we settled at 268 at the end of last year, just to put some perspective on it. And when you look at the NASDAQ, Bertha, we are 21 points on today's low above Friday's high. A real breakaway record close.
Yeah, we've got records today in the chip sector, the communications sector, hardware sectors, and the big three are really what have been driving it all quarter. Alphabet really catching up there to Apple and Microsoft in terms of really seeing some gains. Microsoft on pace for its best year in 21 years. Meantime, we're also seeing some small cap highs today as well in the Russell 2000, and some of the newest members like Turning Point Therapeutics is one of the best performing IPOs of the year. Children's Place is a big gainer, but that's been a big loser, and part of the reason why you've seen the Russell 2000 still below its all-time highs. It's up on a purchase by the CEO. Over to Bob.
Boeing, really a problem here. Boeing is closing at the lows for the day, down about $14. It was down 12 just a short while ago. Caterpillar has also gone negative. That's why we're seeing the Dow drift lower today. Still pretty good day overall. 5 to 2 advancing to declining stocks. Take a look at the VIX. It was in the 11 handle area. Now it's moved up to 12 or so, but still pretty low. You want to look at something like the HYG high yield doing very well today as well. 52-week high in many of those ETFs. There's the closing bell. Dow is sitting at the lows for the day, although a terrific day overall, 104, but most of those declines that we've seen due to Boeing.
To the closing bell, everyone. I'm Wilfred Frost.
And I'm Contessa Brewer in for Sarah Eisen today.
Let's check in on where the market finished. Record all-time closes once again for the three major averages. The Dow did lag behind the others, up only 0.4% today because of Boeing's troubles. The S&P up 0.7%. The Nasdaq up almost a full percent. A trifecta of record closes once again.
And joining us to talk about the market day, Dan Nathan, principal at Risk Reversal Advisors, and CNBC contributor Paul Hickey, co-founder of Bespoke Investment Group, and Samantha Azzarello, global market strategist at JP Morgan Asset Management. And it's great to have all of you here today. Dan, let's begin with you. What's really driving the action?
Well, I think that in the last week you had two headwinds to basically economic growth and also headwinds to kind of people feeling good about the markets, kind of just being turned away for at least a few months or so. That was obviously trade and it was Brexit, and now we're at this point of the year where we're up 27.5%, 28% in the S&P 500, and there's really not too many reasons to sell stocks between now and year end. So I suspect you close plus or minus a couple percent from here at December 31st.
It was a very strong day for European stocks today, which might have helped at least at the open here in the US. Samantha, do you think that improving global outlook is playing a part here in these record highs?
I definitely think it's part of it, right? We think the manufacturing data globally, which has been in contraction for the last year and a half, is bottoming. I do think, though, it's priced in, right? The S&P 500 is up about 8% over the last 2 months, and that's not on earnings growth or earnings revisions going higher. This is really just on sentiment and investors feeling better.
Paul, is that investor optimism well-deserved, or these big issues that have now, they seem resolved, but is there a possibility that we see a re-eruption of trade tensions and Brexit, though it looks like it's going to happen, it's something that's going to rear its ugly head before it's a done deal?
Yeah, I mean, there's always a possibility of that. But I think what we also need to mention is that what's the key trade of the last 2 months is the Fed basically saying we're not hiking rates. And they reiterated it the last week. We're serious. We're not hiking rates anytime soon until inflation shows signs of overheating. And right now, the indicators aren't showing that. So when you lift the uncertainty, you have an economy that's stable, a global economy that's stabilizing, a U.S. economy that's actually showing modest growth, and a Fed on the sidelines. It's a good recipe for stocks.
Samantha, is there going to be an increasing focus next year, therefore, on earnings? And were you suggesting just then you're not that constructive on the earnings outlook for next year?
We're not as constructive on earnings, I think, as the street is. I think if you look at the fact that the U.S. economy is going to be growing at 2%, we can basically back out what revenue growth for U.S. companies is going to be, and let's say steady but slow global growth. I think buybacks are also coming down. We know that. But I think margins are kind of the big thing that are still up in play. We really don't know from here if margins are going to deteriorate more or they're going to stabilize. And I think that's the key question for U.S. stocks next year.
Well, Bank of America did give a bullish market outlook for Q1 of 2020 earlier today. The firm says it expects a market melt-up on receding Brexit and trade war risks, as well as the Federal Reserve and European Central Bank continuing to add liquidity. It also expects the S&P 500 to hit 3,333 by March 3, and the US 10-year to hit 2.2% by February 2, which is
March 3 would be 332.
Right.
I mean, as well.
And 2-2. I mean, it's a little, it's convenient. I wonder whether they altered their expectations to fit that or not. Either way, let's assume they didn't. Paul, do you think those are reasonable expectations? First on the stock market, that we can have a surge in Q1?
Well, I think we can see an average year for the market going into next year. I don't think we've borrowed from future returns. Statistically, when you see strong years, you don't necessarily see major underperformance the next year. But that pattern that they were talking about would run counter to the year 4 election pattern, where you typically see weakness in the first half of the year, and then as the candidates shake out and you find out who's running on both sides, that's when the market starts to rally in the second half. So that would be a complete opposite of the typical pattern.
How important is the weakening dollar in what happens in the first quarter of next year?
Very much so. And when you think of some of the largest S&P 500 companies, they get 40-50% of their sales from outside the U.S. So a weak dollar is good. I think Samantha said something really important, though. What is priced in here when you think about expected earnings growth? We started 2019. I think consensus was for $174 in earnings for the S&P 500. Right now, it's looking about $1.62 or so. Yet the S&P 500 is up 28%. So what does that tell you? We've just seen multiple expansion. That means that there's enthusiasm about future profits. If those don't start to come in, if we don't start to see that as we get into 2020, you will see contracting performance and contracting multiples.
Samantha, to the point in the Bank of America note that they not only expect a pickup in stocks in Q1, but also a pickup in yields. Do you think you need to see both to see either? Will that correlation hold next year?
I mean, it's an important question, right? We look year to date and clients feel good and we want them to feel good, but stocks are up 29%. The Barclays Ag is up almost 10%. That doesn't actually make sense, right, when you think about correlations. So, no, I mean, maybe you get a little bit of a bump in yield on technical factors, but it's hard to see stocks moving up significantly in Q1, at least in our view.
Goldman Sachs says a drop in stock buybacks could lead to market turmoil next year. In a new note, the firm says it expects buybacks to fall by 15% this year and decline by another 5% in 2020. It says a greater than expected decline next year could lead to slower EPS growth and increased volatility. But despite the worry, Goldman is bullish on equities for 2020. It currently has a year-end target of 3,400 for the S&P 500. I mean, the stock buybacks clearly have added a tailwind to the market's performance over the last couple of years. What do you think, Dan?
Well, listen, corporates just got a huge gift this year. There was 3 25 basis point cuts by the Federal Reserve. It made it that much more attractive for them to kind of take out debt and buy back their stock. I think to one of the points we talked about earlier, for some of these mega cap names that we know have a ton of cash and they have the ability to borrow, I'm not so certain Microsoft up as much as they are, or Apple up 80% on the year, that these companies are going to continue to buy their stock at these sorts of levels. So you could see that moderate somewhat in Q1.
Do you think that we would start to see them, Paul, instead use the money to deploy in capital investments?
Well, yeah, so to what Dan's point is, these stocks are up a lot. You would hope that they would have better uses for the cash as the stock multiples expand. And, buybacks in that note, we're down 15% this year. How much is the market up this year? It's up 27%. So a decline in it's not as binary as falling buybacks result in lower stock prices. In 2018, we had a down year. So, it's not all about buybacks. They're an important part of the market, don't get me wrong. But if we see stronger than expected economic growth with the Goldman analysts we're also looking at, that will be a positive catalyst for stocks.
Paul, all else equal, even if we don't see a rise in capex, should we not see a fall in buybacks when stock prices have risen? At least some CEOs must be looking at it and saying, well, my stock's actually not that cheap anymore. I should boost dividends.
Yeah, so that's the point. If you're seeing the stocks steadily go higher and you keep buying back more, that's what we saw in the early 2000s in the financials, just buying stocks that became incredibly more expensive. And so that would be a prudent strategy to lower buybacks as valuations expand.
Some of the banks could be on a 10% yield if they shift all buyback into dividends.
Which gets to the financials, which are one of the only sectors that are below their historical average PE ratio over the last 10 years. And they're the second biggest sector, or one of the top sectors. So that's a catalyst potentially for next year.
To that point, Sam, do you think that the financials are set up for a decade of running ahead?
We like financials. We like any sector where total shareholder yield from dividends and buybacks is above average, and the top of that list is financials.
All right. Thank you very much, Samantha Azzarello, Paul Hickey, and Dan Nathan. Appreciate the conversation. Up next, former Treasury Secretary Jack Lew joins us live at Post 9 to make a major announcement. Who he's endorsing in the 2020 presidential race. This is a big interview. You will not want to miss it. Closing Bell is back in 90 seconds.
What do advisors look for in an ETF?
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Welcome back. Three record closes there on the stock market today. Jack Lew, former Treasury Secretary under President Obama, is here with us on set to make an announcement in the crowded field of 2020 Democratic presidential candidates. He's announcing exclusively now on Closing Bell that he will endorse former Vice President Joe Biden for president. Mr. Secretary, thanks so much for joining us. Great to see you.
Great to be with you.
So talk us through the reasoning. Why have you gone for Vice President Biden?
Well, I've known Joe Biden for 25 years as senator, as vice president, then as a person. I think the times we're in call for somebody with both the heart and the experience to address some very serious challenges. Joe Biden has both the heart to care and the experience to lead. He has demonstrated his deep concern for an economy that works and works for working Americans, for restoring American values, and to restore America's leadership as the global and economic leader that we need to be. He's also shown he surrounds himself with people who really are the leaders of the next generation, and that he has the ability to reach across party lines and within the Democratic Party to all parts of the Democratic Party. Candidly, he has the experience and the ability to make Donald Trump a one-term president.
But can he win?
I believe he can, yes.
Do you fear, some people have suggested that he's not as energetic, as on the ball as perhaps the vice president you worked with was at times? Does that criticism in any way bother you?
You know, I've seen Joe Biden over many years always demonstrate both the capacity and the endurance to get things done. I don't think that's any different today. You know, he's sometimes has stumbled over a word here and there, but that's not new. What matters is a record of accomplishment. It's a record that I saw in economic discussions where he always was the one who brought it back to what does this mean for the American economy and for American workers? For the global discussions, what does this mean to make America safer and to have America be the leader we need to be? Those are all the skills we need in a president.
Let's talk a little bit about what his platform is and what he thinks going forward. He wants to increase capital gains tax rate. He wants to pay for infrastructure through changing taxes on corporations and wealthy. He wants to increase existing taxes on upper income Americans. Is that the right approach for this time?
Look, I think anyone who looks at our tax code sees that there are things in it that are broken, that are unfair. The proposals to fix it are going to mean looking where it's possible for individuals and businesses to avoid taxation and addressing those. That's what tax reform really means, not just cutting rates. I think if you look at what he's stood for, it's been for the kinds of measures that make sense. You know, when I was at the Treasury Department, I didn't hear a single corporate CEO who asked for a 21% corporate tax rate. So there's room in our tax code to make changes, to raise more revenue, and to make the system more fair. And if we want to pay for the things that we need to do to address the need in this country for infrastructure, for education, for health care, we're also going to have to find ways to pay for it.
Does Senator Warren and Senator Sanders go too far on those economic issues?
Look, I think there's a lot of talent in the Democratic field in this campaign. I think there's ideas that run the full gamut. My own view is that to win this election, it's going to be important for Democrats to articulate positions that can bring the Democratic Party together and also reach out. I think the kind of centrist ideas that Vice President Biden has talked about and a number of the other candidates have talked about are the way to win. I also, from my own experience working for one of the lions of the Progressive Democratic Party, Tip O'Neill, we used to call the Democratic Party a big tent. There's room in the Democratic Party for a lot of views, but you have to be able to reach across the party and sometimes across party lines.
You said at the top you believe that Vice President Biden can win. Can Senator Warren or Senator Sanders beat Donald Trump in your eyes?
Well, I've always been the policy guy. Now, as I told President Obama when I became chief of staff, don't expect me to tell you where you need to be when you're running for re-election. What I know is that in every survey that I've seen, Joe Biden is the strongest candidate nationwide. In the key states that we have to win the election, he's the strongest candidate. And I think that's actually something that Democrats care deeply about, because this is an election beyond normal importance. Having another 4 years of what we've been going through could do such deep damage that it's going to have to bring the party together.
But we have record high stock market. We have unemployment that we have not seen in 50 years. Has President Trump been great for this economy?
So, I think you won't be surprised when I say that he had inherited a pretty strong economy. We're in the 11th year of a recovery, 7 years of which happened in the Obama-Biden administration. I'm very proud to have been a part of that. I actually think this economy would be stronger today if we had a president who didn't create the kinds of anxiety and uncertainty that has led businesses to sit on their hands instead of making investments.
You mean about trade?
About trade, and that has led to geopolitical risk around the world that's kept everyone on their edge of their seats day to day, hour to hour. I don't think that's leadership. I think leadership is standing up for protecting the rights of American workers and protecting fair trade. It's about projecting American values. It's not about being soft. But I don't think that what we've seen over these last 3 years fits any definition of normal.
But you must accept, I guess, that it has scored points for the president to take on China. Would you advise, whether it's Vice President Biden or anybody else, would you advise them to continue a tough rhetoric on China in order to win this next election?
I think that we as a country have to join very difficult issues with China, as we did when I was at the table with China. There aren't any issues being discussed now that are new. I'd point out that the China deal that was reached, and I'm glad a China deal seems to have been reached, because a ceasefire is better than an escalating trade war. It doesn't resolve the big issues. Those issues are still there. I think Joe Biden knows what those issues are. I think he knows how to engage China in a tough way. I think he also knows how to do it in a way that doesn't create unnecessary conflict that could get out of control, as this trade war has done.
I just want to come back to the broader, how all of this boils down to affect the economy. And you joined us here on set last on July 2017, and here's what you had to say then about the Trump economy.
We have an economy that's at full employment, and at the late cycle full employment moment, we've thrown trillions of dollars of stimulus into the economy. So that's going to burn off over time. I wouldn't sit here and predict that the economy is going to take a turn in the next month or two. There's enough kerosene on the fire to burn for a while, but when it burns off, there's going to be a problem because of the policies that have been in place.
So that was July 2018, not 17, my apologies. Are you still surprised at how well the kerosene is burning, as it were?
So I'm not surprised that we've seen the economy kind of pop up a little bit because of the kerosene, and it's come back essentially to being growing at potential GDP, just above, just below 2%. I think we could continue to grow that way for some time, and we are more likely to if we stop getting into these fights with every country, our closest allies and our adversaries, over issues that have as much to do with rhetoric as policy. I think that the trade war has actually been the biggest risk to the economy in the last 6 months to a year. I don't know. You may know better than I do where we'll be a week from now or a month from now. I don't know what he is going to do on things like the tariff decision on cars in Europe. I certainly hope that he doesn't do it, but I don't know from day to day what's going to happen now. And I don't think these decisions are driven by good economic policy. It's driven by day-to-day political decisions.
You have a few voices now who are, well, they're really like voices crying in the wilderness, who are decrying the access to cheap and easy money and our addiction to it, who are decrying the search for yield for these pension funds and 401ks that lead people to riskier and riskier bets. Do you think that there's a warning here about Fed policy and what's to come?
Look, I think that everyone in the markets, everyone who looks at the economy, is in somewhat uncharted territory after seeing so many years of either zero or near zero interest rates in the major economies of the world. I do think it's something we have to keep an eye on. I actually think that if you look at going back to the tax cut, where are we now if the economy were to take a downturn? we don't have a lot of room in interest rates. We don't have a lot of room in terms of fiscal capacity. We've seen over these last 3 years all the progress made during the Obama-Biden years to get our fiscal house in order and to make sure we had the tools to fight a recession. We're now down to very few tools remaining. I have a lot of confidence in somebody like Joe Biden, who was there at the helm driving forward the American Recovery Act that helped bring us out of a recession, that helped get this economy growing again. And we couldn't have been in year 11 of a growth if we hadn't gotten the first 7 under the watch of President Obama and Vice President Biden.
Although on the point of ammunition, the national debt did rise every year of Obama's presidency, and rates were very low when he left office.
But the deficit was 3% of GDP at the end. It had been 10, so we brought it down 70%.
Right. And the deficit itself has picked up. I totally accept that. But, Mr. Secretary, just pivoting, because we're going to run out of time otherwise, I want to talk about the impeachment. Given all the evidence we've heard so far, given the simple math in the Senate that we're all aware of, and given that there is an election coming very soon, do you think the impeachment process is a good idea for the Democrats?
You know, I look at the way Nancy Pelosi has led the House through this process, and there were months, years, when you could see her holding back the drive until Ukraine happened. I think that Ukraine, what the president did to use his office to influence American politics is something that I couldn't have made up before it happened. I think that this is now happening because of what the president did, not because of what Congress decided.
And if impeachment goes ahead but conviction does not, will that damage Democrats' chance in the election next year?
I actually think that the American people are going to look at the candidates and look at who represents their values, who has a better vision for where to take this country, who they want their children to look like when they grow up. And I think somebody like Joe Biden will win that contest, hands down.
Well, on that note, Mr. Secretary, thank you so much for joining us and bringing us your endorsement for 2020. Always a pleasure to see you. Mr. Secretary Jack Lew joining us there. Now, President Trump discussing the trade deal that we were just discussing with Jack Lew moments ago. And Kayla Tausche has all the details for us. Hey, Kayla.
Hey, Wilfred, the president holding a meeting in the cabinet room earlier this afternoon with governors from around the country to talk about regulations. And in a lengthy availability where cameras were present, President Trump talked about what's coming up in terms of those China discussions and putting that deal on paper and some of the difficulty that could remain. Listen.
The deal will be finalized over the next couple of weeks. It's actually translation is the biggest thing. The deal is finished, but the translation is very important. I said, make sure you have the right translators because you can lose a lot with bad translation. So we're working on getting that done.
The U.S. Trade Representative has said that this is targeted for a first week of January signing in Washington. But as President Trump notes, sometimes the devil is in the details, and specifically the details as they are translated in either language. Wilf.
Kayla, thanks so much. I'm sure the complicated translation from Mandarin into English. Thank you very much.
The tech sector is up more than 40% this year, and our next guest says tech stocks could rally another 5 to 7% before the end of the year. Up next, find out which names could drive that sector higher.
And as we head out, a look at how the major averages closed today at record levels. Closing bell back in a couple minutes.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage,
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen in favorite 30 for 30 podcasts on TuneIn.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Make my job easier this year with a subscription to TuneIn Premium, featuring the world's largest selection of music, news, podcasts, and sports. It's a gift they'll enjoy every day, all year long. Happy holidays! Search Premium to upgrade today. Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Tech hitting all-time highs today after news that the U.S. will hold off on new tariffs on Chinese goods. Apple rallying today, shares up nearly 2%. But earlier today on Squawk Alley, Sanford Bernstein's Tony Saganaki said he remains cautious on the sector.
Our observation is tech is riskier today. There's been huge multiple expansion in the sector this year. And so investors need to balance that and be really selective.
But we have a guest who says there's a lot of opportunity in tech. Dan Ives is Managing Director of Equity Research at Wedbush Securities. He expects a 5 to 7% move to the upside in tech going into the year end or year beginning here. Other than Apple, which stocks in particular do you think could make that move?
I think it's semi-stocks. I mean, if I go back to Friday, that was a seminal moment in terms of a green light for tech, not just Apple, but names like Qualcomm, Intel, AMD, because right now we go into a super cycle in terms of Apple, but then ultimately from a semi perspective, this was the only thing that was going to stop the train in terms of the tariff issue. And that cleared right now. You're seeing a risk on trade going to year end in 2020.
And you think that's worth about 5 to 7% for the sector as a whole, just simply getting this clarity on trade, even though the market had probably priced in getting no further escalation in the very least.
I think some of it, but ultimately Friday, that was sort of the Fort Sumner moment. Because if there was any sort of tariff right there, that was the gut punch to tech, to semi, supply chain, and Apple specifically. I think right now, 5 to 7% is just starters. I mean, we're much more bullish on tech. I mean, Apple, I continue to think a super cycle. We can see a $350 plus dollar stock. I look at cloud in terms of Microsoft, and ultimately, I think it's just a start right here going into really a renaissance of growth.
But can you see Tony's point when he says you got to be selective, that there's risk here?
No doubt, but it's just like many were skeptical on Lamar Jackson 2 years ago. Look at what's happened there in terms of him. And I think there's going to be caution from a valuation perspective. I just continue to view the fundamentals. The math doesn't lie in terms of semis and as well as tech stocks. And that's why right now we're not cautious. There's isolated areas of caution. But if I look at tech right now, I think we're going to a super cycle 5G. We continue to want to overweight it.
Even without real resolution on a long-term trade deal, the fact that this could re-erupt next year and we see tensions intensify.
No doubt that that's a long-term risk as well as antitrust, but at least for now, I'm talking the next 6 to 9 months, You're going to see a lot of these stocks re-rate in front of that, and that's why you could have some yellow flags in there, but ultimately right now, it's an all-clear green light in terms of tech, and I think numbers go up higher, valuations continue to re-rate, and I think what you're seeing today, more and more investors have to put on risk going into year-end in 2020.
What do you make of the kind of slightly more bullish sentiment people are throwing towards Tesla at the moment?
Look, no doubt right now, I mean, if you look at just the underlying production numbers that could come out of China and demand as well as in Europe, and I'll be the first one to say, like, you got to give all the credit to Musk and Tesla. They proved many wrong, including us, that there was a near-term issue. And I think right now you're seeing the shorts go into hibernation mode until they could prove that there's another issue. But for right now, I think you'll see this stock continue to go up in a short squeeze.
All right, Dan, thank you.
Thanks.
Still to come, money pouring into so-called socially responsible funds, and the Securities and Exchange Commission wants to know whether those funds are really adhering to the principles. Details straight ahead when we return.
My name's Ian, and I run the Christmas Centres for Crisis. Many people in Britain are homeless, stuck in hostels, sleeping on floors, even on the street. You can change this. Our Christmas centres provide people with food, safety and support, and show them how Crisis can help them find a home and a job in the year ahead. You can reserve a place at Crisis this Christmas for just £28.87. Search Support Crisis Reserve and help someone take their first step out of homelessness this Christmas. Thank you.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown. Again.
Search NFL today.
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Time now for a CNBC News update. Let's get downtown to or across the river to Sue Herrera. Hi, Sue.
Thanks, Contessa. Here's what's happening at this hour, everyone. Cuba's top diplomat with the U.S. is charging that the Trump administration is aiming to break diplomatic relations with the island and close the U.S. embassy in Cuba. It is a move, he said, that Havana opposes, as he also acknowledged the strained relations between the two countries. Democratic presidential candidate Tom Steyer campaigning in Iowa, where he spoke about his economic agenda. He is calling for a wealth tax, plans to tax all income the same, and a 10% cut to lower income and middle class families. He also took a shot at President Trump.
Trump's only path to victory, his chosen path, is to play an economic shell game long enough to win re-election, and then walk away and let someone else clean up his mess in 2024.
Researchers say adding a little spice to your diet could help prevent a heart attack. Their study included more than 22,000 adults who were tracked for 8 years, and people who ate chili peppers at least 4 times a week were 40% less likely to die of a heart attack, regardless of what diet they followed. 4 times a week might be a little bit stiff for me, but
wow.
Regardless.
But also over 8 years. I mean, that's
it's a long study and a big study.
Yeah, a lot. And I wonder whether over 8 years there was other factors that might be influencing things. I don't know.
I'm sure there are. That was the main takeaway, but with all of these studies, there are other issues, you know, choice of lifestyle, not only diet, but exercise. So I'm sure there are a lot of other things.
But also think about it. The peppers just burn it out. Whatever's bad, it just gets burned out.
It just goes away. Yeah.
So medical, isn't it?
Sue, thank you.
You got it, guys.
Have a lovely evening. We'll see you tomorrow. Meantime, the Wall Street Journal says ESG investment funds are coming under scrutiny, with multiple firms receiving examination letters from the SEC over whether the funds are truly going to companies with robust environmental, social, or governance credentials. This coming as ESG investing has grown globally to more than 30 trillion in 2018, with another 20 trillion on the way, according to estimates by Bank of America.